I just want the story, the DocuSign story, right? I think historically you've beat the market's expectations on billings, and so everyone was very excited. They're a little concerned on that. The story behind billings growth.
Well, so when I joined a little under 2 years ago, I think there were three questions. One, could we stabilize the business? Could we become more efficient? And then could we develop our next chapter? And so this quarter, I think, is a nice milestone. I think we have really stabilized the business. We've made the business much more efficient, the profitability, as you mentioned. And we are now poised, I think, for growth. We've launched our new product line, which is much broader than the e-signature that everyone's so familiar with.
Yeah.
And we saw some early, very positive results this quarter. It's still early, but we're very encouraged.
Dig into those positive results. AI infused. We're thinking about a broadening out from contracts. How is it working for the companies that use it?
Yes. So we launched it to North American commercial customers. And we've had a number of folks that have not only ordered but deployed, and the early results are really good. See, what they're saying is they love the fact that we can ingest all of their agreements and give them immediate insight into every contract that they have. And this is valuable for every role in the company, whether you're a CFO or a frontline seller or a purchasing agent or an HR recruiter. You want to know the agreements that are relevant to you, what are the essential terms, and how are things going. And that's what we provide, and we can do that fairly instantaneously. When
you have an AI-enabled product or a product that's made more valuable by AI, it's usually required an investment on the talent side or the compute side. What can you tell me and your investors and the audience to convince us that that investment is paying off fully? Yeah. Well, so as if you look at our past performance here, we've been doing AI for a long time. We've had AI embedded in our products since before the LLMs came out, and that's been features that we've embedded as well as charged separately for. But obviously, with the advent of these new models, we were able to take a significant leap forward. And the feature that I just described is AI enabled. So we take your contract data, run it through some of these models, score them, and then give you back the essential data about your agreements. And we could do that in a very lightweight, instantaneous way. From an investment perspective, we have ramped up our investment in product and technology, and we are moving to the public cloud. We have a big partnership with Microsoft. But I think we're holding the line pretty well on expenses. We can do this efficiently. And, of course, the costs of AI continue to drop. The cost of processing an agreement has dropped tremendously just in the last 6 months.
We're looking at the moment at an intraday. You're up 3.7%. I look back over the 5 years. At one point, your share price eclipsed 300. And I'm just wondering as to whether you think this AI euphoria is ever going to infuse itself into the capitalization, the market capitalization of your business once again, Allan, as the pandemic did once before.
Well, I think those were days when DocuSign was growing at 50, 60% a year. So I don't know that we have a path to that yet. I certainly love that, but I'm not projecting that. I think for now, we're setting ourselves a milestone to return to double-digit profitable growth. I think we have a path to that, and the early signs here are encouraging. And we'll see how the market responds to that. We're obviously a much more profitable company now and operating at bigger scale. So I'm not going to predict where the market's going to value us, but we are really pleased with the early progress here.
Just very quickly, something you just said, Allan, the cost of AI is dropping.
Yep.
I don't know that I've heard many people say that to me, at least. What do you mean?
Well, so if you look at the efficiency of these models and the cost per item processed, whether it's an image or in our case an agreement, the cost has dropped very significantly by a couple orders of magnitude. With that said, obviously, people are taking on more ambitious tasks. The models are getting larger. And so the compute costs for the large vendors, for example, the amount of capital investment they're making is going up and up. I think it's because of the expansiveness of the opportunity that they see. But I'm telling you, as a customer, on a per item process perspective, costs are dropping very rapidly.